All right, good morning, live. What's going on? Yeah, I get all loaded up for the day. Big day ahead. Big start to the year, honestly, of trading, in my opinion. Just because if when we just think about it, we haven't had, you know, to deal with or to work around, you know, this type of news volatility in quite some time because of just the election every 4 years. I was reading an article yesterday, and they were just talking about how this is the least anticipated Fed meeting in a while. So I thought that was interesting. We're gonna get into some of these notes. I got some stuff I want to get into. Let's take a look at news today. Oops. All right, so 5:30 we had news come out, building permits. Um, this is all great. This is all great. So I'm gonna tell you what I think is gonna happen here later today. I think we'll get a 25 base point cut, uh, which is still cutting those interest rates, and that's the consensus. So the consensus is a 25 base point cut. And now, even though it is cutting the rates, that is, it's a lot less aggressive. So kind of how I'm interpreting that. I'll get to that. I'll get to that. Let me get set up. Let me get set up. I did hear a little jingle. Is that Jason? Yes, sir. Jason, what's going on? All right, let's get out of that. Get out of that. Not worry about that. Close that. Close that. There's a few screenshots I actually want to share. I have to show there. Google. Let me cut on a little bit of tune just so I can have something in my headphones. And then we will get this thing going. All right, that's good. That's good. Let me make sure my audio is good. I don't want any audio problems. And it's not good. Now it should be good. Now it's testing, testing, testing. There we go. Now it should be good here. That's good. That's good. All right, let's get it going, huh? My trade log, by the way. News earlier. My notes out. Let's see. Gasoline stocks change. So things related to oil, gas. I honestly did not look into anything like that yesterday. It'll have its impact on the market just because, at least from what I understand, the oil is. becoming scarce. Um, I know at least where we get our oil, or specifically speaking on the Middle East, I know we're having to drill deeper than we used to, and deeper and deeper and deeper. So just the amount of oil we're able to extract has decreased. Um, and so I know that there are, even like RFK, when we were talking about that the other day, renewable energy and clean energy, like there are other things that we're trying to get towards, which, can make sense because of the scarce oil supply. I don't know great detail about that yet, but I do want to get into it just because I know it's heavily important. It's heavily important. Um, but we can just see the change, right? Consensus. And what was that? Is that in barrels? Let's see what it is. It's measured in units. Let's see, crude oil stocks measure the change of supply, right? Changes the supply situation of crude oil on a weekly basis, right? So they are projecting let's see, consensus is 1 million. Oh, that's that one. Let's look at September 11th. That's not this one. We're looking at this next release. So they're projecting this decreases even more as far as oil supply. Interesting. Uh, as far as the building permits goes, these four folders right here, all supporting a bullish dollar. Now, the building permits are leading indicators, so it's gonna look into the future of our economic health, and gauge that, and this folder does gauge that. Um, when we're thinking about building permits, this is directly related to the construction sector of the US. Um, and so how does this impact why it impacts the building permits is numbered in housing units. So the folder is the number of housing units authorized by building permits. This affects the real estate market. And then I think about how it affects mortgage rates as interest rates are about to get cut, which is kind of why all this stuff came out together, 30-year mortgage rate, mortgage applications. So that's why all that stuff came out together, right online with these building permits, bullish for the dollar. So that'll support the dollar. It'll support um, the economy showing that it's regrouping, especially since this is looking into the future. So this, in my opinion, would support a 25 base point cut, not a 50 base point cut, right? Especially since it was, you know, pretty aggressively up there with the consensus. But ultimately, 5 hours at 11, that's the one we're waiting for right there. Um, Aside from that one though, a really important one that I was looking into that we're gonna want to pay attention to tomorrow is the economic projections that consists of the Fed releasing basically the GDP over the next 3 years and the current year, the unemployment rate over the next 3 years and the current year, PCE, personal consumption expenditures, and core PCE, which is just excluding energy and food, because it without the energy and food, it measures core PCE, and that um, correlates right to inflation. So they'll release those, and then the last one they'll release is it's called the Fed funds rate. So the Fed funds rate is like the interest rate, but this is the specific rate that Federal Reserves abide by to borrow from one another. So Fed funds rate is separate from the federal interest rate. The federal interest rate is not on the scale of bank to bank. The Fed funds rate is a bank to bank thing. And so we'll go into that. That'll actually be released later as well. I think it's at the same time. Yeah, it's at the same time as, all that. They release their economic projections, interest rate decision, and they go into press conference at 11:30. So yeah, let's see what it's looking like on the charts here. Look at my dollar. Dollar really respecting that daily level, has been respecting that daily level, for the last, you know, just under a month, just under a month, messing around in this area. Let's get rid of that. Let's get rid of that. Actually, let's keep that. I like that there. Price still just in this range on the dollar. Even though this is a significant radius, but I want to see us move out of this range here. We could move lower to this weekly level, just under 100. Even I could see something happen, an initial spike, right, down to that level and move back upwards if we get a 25 base point cut. There's actually a few articles I wanted to pull up. I think it was this one right here. I actually wanted to show. Yeah, I want to show this right here. So this says the Fed decision has the potential to roil foreign exchange markets as well with the dollar yen pair seen as the most sensitive to the rate decision. The dollar rose nearly 1% against the yen to 145.95 on Tuesday, while a 25 base point rate cut would likely lead to knee-jerk reaction higher for the dollar, potentially taking USD JPY above 142.0 level. A 50 base point rate cut could take the pair back toward the psychologically significant 140 level. Right. So they're saying a 50 base point cut on our USD JPY would take us to this level, which we're currently moving away from that level, right? So it's this decision making level here. So that's the 140, right? Well, actually, I'll move it exactly to where 140 is, right there, right? And they're saying 25 base point cut, we start moving bullish towards, 142 somewhere in this wick. Um, that's still not super significant push to me, but we're kind of seeing what 25 base points will do in the eyes of the market and what 50 base points would do in the eyes of the market in terms of how to affect the dollar, in terms of how to affect the dollar. That's kind of why I was saying a few weeks ago that it wasn't so cookie cutter anymore from like, rates getting cut. Does it hurt the dollar? It does because in this case, we're trying to cut the rates to stimulate the economy. But if we cut the rates too deep, it does depreciate the value versus cutting the rates only 25 base points kind of provides a little bit of confidence in the economy regrouping on its own rather than it being stimulated by money, right? So that builds confidence in the eyes of investors. It builds confidence in me. Like now I'm sitting here thinking about being a consumer and what it's like to be an investor on my end. Um, I can definitely see that making sense. So price came and moved to this 30-minute decision-making level. We honestly might get a really choppy market until Intel news. Thinking about where we are right now. Playing right on that key level of 142 there. Let's take a look at gold. I'm gonna talk about this real quick and then we'll get back to the news. But these were these red and blue lines. Right. So yesterday, we know that, you know, probably the first day I was taking live executions in, I can actually get an exact date here. First day taking live executions since August 20th. No, August 20th. So just under a month, which, in trading terms, just under a month, but probably just over a month in normal time. And I kind of show this, just to always be transparent with the psychological aspect of trading and being aware of them. And yesterday I was a new trader. I didn't follow the same psychological protocols that I know to follow. Right. And in turn, I mean, I didn't only lost a couple of dollars, which is still a lesson. But the main thing I was trying to pull from it was, I'll just show you guys my trade log here, was the first, these first few lines here. No VXT structure, no plan for entry, no VXT structure, no plan. The reason I wrote that on every single one of them, because I went to backtest, right? And in the back test, I couldn't figure out why I entered because it wasn't on my normal entry, like my normal 1 minute execution, which is fine. It doesn't have to be, as long as I have a plan for why I entered. Because if I don't have a plan for why I entered, I don't have a plan to exit, or I don't have a plan for price to get to for me to abort mission, right? And so this one right here was my first entry. Oops, I need to get the arrow. This one right here is my first entry, right? I closed out that entry right here where that red line is. So that one ended up in profit. I was in that trade for a total of 2 minutes. That is completely against how I like to trade. But when I came down to it, it was just psychological. It was just psychological because as we see, that very first trade I took, if I would have had a plan, then I would have known where I was taking that trade or the potential area that I could take that trade, which I would have also known the potential area that I would allow this trade to move towards before I decided that I would close it, right? And so instead of risking my 57 pips, right, for my 112 pip, because this is how I would have played it. I would have taken it to the end of this decision making level. maybe if I had a decent lot size to where I can take partials, even let it see if it wants to go down to this area of imbalance. But as we see, it did move against that. Um, but long story short, you know, I hadn't traded for a while, haven't taken a live position for a while. When I got in there and I took that live position, or when I was actually thinking about taking a live position, I needed to revert back to my training, and I didn't. I allowed the market to treat me like a sailboat, to treat me like a sailboat in the water. But I'm glad I did that back testing right after the session yesterday because I got really good clarity on it. This 30-minute decision making level right here on gold, key level as we move towards it, near an all-time high. Um, and anytime I'm near an all-time high, I like to find the top of that high. Or excuse me, I like to put a zone. I would call it a no trade zone. So when price starts to get here, this would be a no trade zone for me. Everything in here because so susceptible to price completely falling out of the sky if we take buys, and also susceptible to price going through the sky if we take sells, just because where we would be in an area. So let's take a look at something here. Hmm. See that from the dollar right there? Hold on, go back there. Seller's volume just came out of nowhere on my dollar. Let's see what's going on with that. Hmm. Seeing that massive seller's volume come in on the dollar there. I don't see anything cooking right now. This gap in price right here at this decision-making level is something I'm eyeing. Just interesting there. You see these little gaps in price that it has left in what direction when I think about the news, when I think about what we want the dollar to do after either 25 or 50. The 25 would send the dollar bullish, in my opinion, which we would start moving towards these gaps and these inefficiencies in price, right? And if we just take a step back, we can see how price finds these decision-making levels, right? So we see price playing between this area, break a decision-making level, move right towards its next decision-making level before then accumulate some more, right? Breaks through a decision-making level before it accumulates some more, returns to that same level, and now it's just accumulating within that same range, right? So a break below, I have a place for where we can go for that, which is this weekly down at about 99.4. Um, but personally want the dollar to move bullish, to go fill those areas of inefficient price action, gap areas, those gap fills, but ultimately eyeing this entire section right here if we're thinking about all the way from this daily. And I'm thinking about this months in advance, right? Like months ahead. So I'm talking off of the dollar based on the next, 4 to 6 months of movement, right? I definitely see us getting back up to this 103 range, right? Because that's what the macros, not all of them, but that's what the economic um cycle is based on. It's based off, you know, long-term principles. Like we just are able to get in here on the 5 minute, in the 30 minute and see what's going on. But it's built on a long-term scale. So I always think about that. Let's check this 5 minute. We'll watch the five. Large area of inefficiency there. Good sellers volume coming in there. Gold potentially getting some bullish movement here. And so aside from the news, um, just technical wise, I did like gold moving bearish. News wise, if we get a 50 base point cut, then I like gold moving bullish. However, you know, just continuously finding these areas of inefficiencies, right? This is a very large area of inefficient price action that I want to see the dollar move towards, right? So I'm talking, 484 pips, which is really not a lot when we're talking about gold. It is a lot, don't get me wrong. Um, but with the, fundamental data ahead of us, I feel like this is not asking too much from gold. 484 pips. And so we see that clean movement there off of that daily area. I want to see if that bearish candle was the signal for us respecting that all-time high. Um, Once again, even if it's one of those things that, you know, price does move down here and then finds an area where it accumulates, right? Because there's no telling that it has to keep going downwards. There are inefficiencies that I still want to see it move towards, even when we're thinking about all of this, right? All this inefficiencies. There is a chance that it could move towards this in the future. Once again, I'm speculating months, even a year in advance, like because this is also my daily chart. So this was back when this inefficiency was created, was back in February of this year. So roughly 7 months ago, right? So that's kind of how I'm just continuing to build um my sentiment as we approach the interest rates and just get greater insight on market activity or economic activity. Um, One thing I was looking at yesterday that I think will play a very, very pivotal factor is j- just trying to understand the teamwork of the central government and the central bank. So when we're thinking of fiscal policy, the stuff that central government makes, and then monetary policy, stuff that central bank makes, I have the speculation that um, we can we can kind of already pick our president. Um, like we kind of already know who the president is potentially going to be in the US. So that's kind of what I built um my research on last night, and bridging the gap between what presidential candidates plan to do and how that is directly correlated with the interest rate specifically. The interest rate specifically, because like I said, we know that they're going to get cut. It's just um, been a debate on how deep will those cuts occur. And now, one thing I want us to know about the interest rates as well is there are still three other meetings on these interest rates besides the one today, right? Or actually, two other meetings, excuse me, this year, two other meetings this year. And so we don't have to put all our eggs in one basket as an economy right now. If I'm the Fed, right? If I'm the Fed, I don't have to deliver a 50 base point cut, which if we see right here, and this is something important for us to, this is why we have to build our own sentiment. And full disclosure, I could be completely wrong about everything I'm saying, but I've done my research. Um, and I just am somebody that once I bridge and I break through a barrier where logic of either statistics or um, an approach where that starts to show itself and make sense, that's when I know I'm uncovering something and I feel like I understand it in a decent way. And that's exactly how I feel about these interest rate cuts. And so even though this Fed Watch tool, which I don't know if this has to be like the market that let me see. Hold on one second. I want to see how they get their data because I know this is not coming from like the FOMC themselves or the Federal Reserve. Um, this is probably something that all the data was brought together. And I actually want to find out. One second. I have to find out. I have to find out. Because that matters to me of how the CME Fed Watch tool gets there. How does the CME Fed Watch tool get there? That matters to me. Uh, okay, so it's from the 30-day federal funds futures contracts that are traded on the CME Group Exchange. So the federal funds futures, that is like a chart. That is literally like a chart where they can go on just, picture trading view coming up to the ticker and coming up to Fed funds futures rate. Like they can find that. So boom. This is typically what they're talking about right here. Um, this thing. And so this is created off of that chart. So it's a speculation. It's not for sure information. And so this is the market. This is the market. This isn't the Fed or anybody in power saying this. This is the market saying that we could potentially get there's a greater chance for a 50 base point cut than there is a 25. That's the market saying that. Why is it saying that? I don't really know why it's saying that because from the research that I've done, I'm able to speculate, okay, a 25 base point cut makes more sense. And so when I think about stuff like um market manipulation, right? And you know, trying to influence buyers to do this or influence sellers to do this. And when I'm thinking about something like this and the market sentiment, right? And, you know, the 70% of traders that are shorting this, okay? That lines up directly with a 25 base point cut. Right. And now there's not all the time where I'm looking at this and I'm taking what the market is doing. Just like there's probably like a last week where it was still saying people were shorting gold and gold was moving bullish still. Like there wasn't any signs that it was slowing down, and so at that time, that was a different analysis that I would have had of the market manipulation, right? Because the speculation there was, wow, we're already at an all-time high. How how much higher can we go? Right. But without even knowing that, but it was too far out from the rates. So there was still data that hadn't shown itself on our USD for our USD economy, which still allowed, confidence in gold to keep moving it bullish. And so let me see, we'll go back here. And so yeah, I like 25 base point cut. I like gold selling off when I think about my daily here. I see our MACD moving towards a level on our daily chart that it has been to previously. And we see when it was there, right? We were actually able to move higher than that level after we got this bullish push, but it looks like we may be peaking out on our volume, which would support that bearish movement. And that inefficiency there, it's like, that's so clean. So clean. I want to see, I want to see the dollar just play in this area. I would like it for it to at least get in this area so that I can use that as a stop loss. Um, how I would play this is I would like to see the gold get somewhere in here, somewhere in this level. Ideally, the closer to this level, the better for my stop loss, because I'll probably slide my stop just above the all-time high, give myself about a 50 pip radius. So ideally, I want to see price get in this area. Like I said, anywhere in this area is fine as long as it gets in this decision-making level. It'll allow me to at least have anywhere from a 50 to 100 pip stop. I have a 37, excuse me, a $37 account. Um, I am in the position to put, you know, another $40 into my account come, let's say, tomorrow, right? What's today? 20, it's a Friday, right? And so there's this term a childhood friend of mine always used to use, and it was you gotta risk it to get the biscuit. You gotta risk it to get the biscuit. And that's kind of how I'm feeling with gold. Only with gold, right? Just because that is something that we have seen has been performing at an abnormal nature with how high gold has been. Um, and even though there was something saying that this was the most unpredicted um, Fed rate in quite some time, I think this was the article right here. Um, this was like the one of the least predicted Fed funds rates in a while. They were saying, I forgot what article it was. I was trying to find it, but they were saying that normally we're able to speculate what the Fed is going to do at least the day before the rates come out. But right now, everybody is kind of just sitting on their hands, um, waiting to see what's going to happen. Fed's first rate cut in 4.5 years. All right, so there there was some stuff that came out from the Bank of Japan yesterday, and it was this info here. And so what we saw was the trade balance from the Bank of Japan improve on its consensus, right? So the consensus was a lot better than they thought, but it's the export to import ratio is still worsening. Um, so meaning that the yen is currently still losing in this race of balancing trade. Um, and now the yen, this is the second consecutive month that they've had a trade balance increase. Um, or trade deficit, I should say. So trade deficit is imports exceeding exports, trade surplus is exports exceeding imports. Um, but the reason, what was it? Let me see. Weaker yen means production. So when I was looking into the yen, I was like, okay, imports, their imports are still going up. I saw that their exports rose by 5.6% year over year, right? So their exporting is getting better. Their importing is not. Um, they have some interest rates that they're going to release tomorrow, but speculation is that they won't cut those. But there is future speculation on them increasing interest rates, right? So I'm holding on to that. The yen is currently trying to appreciate their currency, because the weaker the yen is, the more expensive it is for them to import, because they're paying the same amount of yen for the same amount of goods and resources, because of the yen being, um, like the currency value between yen and other countries, the yen is normally on the weaker side. And so if their currency continues to lose strength and other currencies are potentially gaining strength, we can see, um, how even we can see how the imports would affect the yen there. So they're trying to bring value to their currency so that it is not completely just washing them out when they are having to import stuff, because they're actually the world's largest the fourth largest oil importer in the world. And so when I think about, as I just continue to put all these pieces together, when we think about what's going on in the Middle East, right? We think about we know what is in the Middle East, and that's predominantly oil. Um, the U.S. involvement there. I think about the movement towards the renewed energy type of deal. So I'm just trying to put all this stuff together because our economy does also impact how JPY's economy performs, right? Because stuff like, tariffs, right? How it affects other economies, other countries shipping products or receiving products, right? So everything works together. Everything works together. Everything works together. So let me see. Japan's reliance on importing energy. Consumer impact on import cost. So yeah, those import costs, if that doesn't get fixed on Japan's side of things, it could continuously impact their consumers. If it impacts their consumers, knowing that there has been speculation from members of the Bank of Japan for increased interest rates, there could be a speculation that the yen will recover their trade deficit, because if they don't recover their trade deficit, they're going to be paying more for products, which means their consumers are going to be paying more for the same amount, which is going to hurt their economy. But there's speculation that they're going to increase their interest rates. So if things are costing more for consumers and their interest rates go up, those things are completely opposite of one another, right? So that would hurt the yen even more. So that's how I can build my personal sentiment on what could happen there with Japan. And now, of course, how the dollar performs does affect that. Um, it does affect that. I actually had my yen marked up, but it didn't save because I'm not logged in. So let me actually pull that up real quick. So this is my yen, all right, 67, 65. Let's see if it moved below those. 67, 65. Nope. So that was my daily, right? Yep. It's my daily. Daily. I had to be my 12 hour then. Just kind of getting some boundaries for USD JPY to work within. There it is. That's what I was looking for. So as far as the yen, right? When I'm looking at this chart, this is my daily. Just from a technical aspect, technical side of things, I could see our yen moving downwards, right? At least down to this level. If not that level, then we move towards this level here. But then I have to ask myself, how do we get there? How do we get there? What do we need to get there? Well, we need the yen to continue to lose value, which the trade balance report would support that. But I'm going to be careful in saying that because it's a lot more bullish than the consensus. Like they projected a 130 a 1.38 billion dollar a billion yen trade deficit, right? And that was a lot better than they expected, but it was still worse than the previous. So I'm being really cautious with this. However, this number is really important to how the yen looks right now because this is exports. So this is directly contributing to money going into their economy. People outside, countries purchasing things, right? So them sending things out. And this number was half, almost half the consensus, right? And so that is poor for the yen. That is poor for the yen. Look at imports, right? So trade deficit for the yen increased, and everything else that kind of supported the yen to appreciating value actually worsened, right? So a country that 84% of its imports is energy. And this over in the year over year, their imports went down by a total of 14%, right? 11% off of what they expected. So if we can just think about the practicality of it, if you're, like me, I work in a cell phone store, right? And if we aren't getting any phones in, if we're not importing any phones, we're getting no phones to sell. How does that affect my pockets? How does that affect the store? How does that affect the company? Right? We have nothing to sell, right? And so, same thing here when it comes to the imports for the yen. However, on this side of things, if we know that 84% is directed or is imported and is for energy, then we can see what that can do to a Japan citizen and the consumer sentiment behind that. We can see how the Bank of Japan, which is similar to the FOMC, um, for the which is similar to the Federal Reserve for the US, we can see how they could potentially view that lack of increase or that significant decrease in imports and exports. So as I'm viewing that, I'm coming right back over to here and I'm seeing, okay, I can see how the yen can lose value. Or let me say this, we have data that supports the yen losing value. We have data that supports that. Um, and now all it is a matter of is the dollar validating USDJPY moving bullish. If the yen goes downwards, we want USDJPY going upwards because that would mean the dollar would be going upwards, which means we would be getting a 25 base point cut. As we're looking at gold here, I probably won't take any entries on this call for two reasons. The first reason is for an obvious one with all the news later on today. The second one is because I was looking for my phone for about 20 minutes before I got on this call. So I was a little pissed off when I got on this call because I couldn't find my phone. So my emotional state right now is uncertain just because I'm still absorbing the market information, movement. Like I haven't spent enough time with it yet this morning. 6:44. Just haven't spent enough time with it yet this morning. I feel like when I'm late to the movement, it takes me a second to interpret the movement. Like we started moving over here. 5:30 news came out. Not anything crazy. What about from the dollar? 5:30 news came out. Not anything crazy. DXY potentially moving downwards still. As far as USD JPY goes, I want to see a move up towards I want to see move up towards the 145 level, right? Sweeping these areas of liquidity on that way up, right? Liquidity points, number one. So let's walk through these liquidity points, right? Liquidity point number one. Why? Because at this point, we got this in large wick, buyers push price all the way here, sellers came in. So what is up? What is up here? Buyer money, right? Buyers push price all the way up here, and they haven't exited their trade yet. They haven't got out their trade. They're still there. Right. So that's how I'm thinking about that. Same goes for here and here and here and here. Ironically, they are all just slightly below each other. So those are all unfulfilled orders. Those are all unfulfilled orders. And then if we think about how these get left, I can bet, I can bet some of those were because of news. Like I can almost guarantee it. Some of those were because of news. And so they are just now profit targets. They're profit liquidity areas, decision-making levels, and inefficiencies in price action are all profit targets. They're all areas of areas that price can potentially move towards. Their price is going to move towards one of those three areas every single time. So even when it looks like it's not, or it's going to turn around or something, I identify where price is because it's it's looking for something, right? Um, I kind of think about the analogy in basketball, right? You're playing 5-on-5, everybody has somebody they're supposed to be guarding, right? There's this term in basketball called no man's land, right? No man's land. When you're in no man's land, you're not guarding anything. You're not guarding your man. You're not helping anybody else guard their man. You're not doing anything. You're just in an empty space where there's nothing. I rarely see Price in those empty spaces. Like Price is rarely in no man's land. It is always looking to be attached to something, whether that is a decision-making level, whether that is a liquidity level. Now, it does not have to necessarily sweep that liquidity. What I mean by that is price simply coming up in here, just like it did here, and accumulating at a level, right? Accumulating at a level, right? Accumulating at a level, right? And then figuring out, okay, at this level, when we were accumulating, we were really close to a weekly area. That's a really strong area, right? We generated a decision making level here and here, right? So two decision making levels. We have an area of where price accumulated off of a strong decision making. You know what I'm saying? Like, and just piece together, piece together. And always think about the three things when you're piecing it together: decision making levels, liquidity, inefficiencies in price action. Um, oh, look at gold. Gold's tanking. I'm gonna enter a sell on gold. Let's look at the 5 minute first. Dollar getting good movement. Let's check USD JPY. Let's get it going here. USD JPY just moved above that 30 minute. You didn't get any news. I didn't hear my thing go off. Was that this? I'm gonna wait. I'm gonna wait. Not gonna answer. Not gonna answer. I'm gonna wait for the big move later and play that. So, I'll use this to continuously build my analysis as we approach 11. As we approach 11, actually, I gotta actually do something. Nice. Nice, Jason. Clean snag right there. No, yeah, I love once again, I gotta keep bringing it up. I gotta keep bringing it up. Magnets and force fields. Magnets and force fields, decision-making levels continuously acting as magnets and force fields, right? So we have this 30-minute decision-making level, right? What do we have? Price moving towards that 30-minute decision-making level, strong wick, strong sell-off, volume reading it as well. I actually like that a lot. I like that. Looks so clean. 5 minute looks clean. If we can get our cloud, and then, if we break this structure here, I definitely can see us going to touch this area of inefficient price action below us. So let me actually do, it was a 5 minute decision making level I just saw. So yeah, like this, like, look at all this here. And this is a lower time frame, but you just see the action at this level, right? Decision making levels. I can even see price coming down here, take out that liquidity, then move back bullish. Just can't see it making its move prior, is its main move prior to the interest rate drop. I want to see. That's what I want to wait for. Gold rises early on Wednesday, pushing back above 2,600 mark as the dollar weakened ahead of this afternoon expected first cut to U.S. interest rates since 2020. Gold for December delivery was last seen up $11. The Federal Reserve Policy Committee will end its two-day meeting at 2 p.m. Eastern Time, after which the central bank is widely expected to announce the cut. Mm. More important than the size of the cut will be the Fed's forward guidance and assessment of the economy. Forward guidance. So we'll look for a lot of those Fed pals saying stuff like, we'll look to see, how the data comes out, um, and supports, us approaching that next meeting in November with, possibly moving towards that 2% inflation rate. Um, so we'll just listen for a lot of key terms from Fed Pal of the the outlook of this data that we've had, and the data that they're going to be focused on going forward. Of course, we'll hear them talk about the dual mandate, price stability, and maximum employment. Damn, that'd have been a clean sell off of there too. Losing volume right now. There it goes, comes back. If we break below that area over here, that thing might continue falling. Dollar did make a good push up, bullish push up. Let's see if it stays. I do like what I'm seeing on the dollar right now. USD JPY. Do like what I see on USD JPY as well. Gold reacting off of that level. Just this. Just all this. Even though this is like I don't have my decision making level marked up, this entire box is a decision making level. So what I have labeled here is multi time frame means I've seen a decision making level on a 30-minute, 15-minute. I've seen it on the 1 hour on this in this area. Um, maybe not the 1 hour, but 30-minute for sure. Decision making level there. Decision making level there. 15-minute decision making level over here. A couple of them in this area. So it's just a strong area right now. And we're seeing that reaction from price, which I do want to see it just play in this area. Ideally, like I said, I want to see it get in this area, but that may be asking too much before the big news. Dollar gave us that initial bullish movement, potentially losing that now. USD JPY moving on a strong 30-minute area as well. We're seeing it consolidate. So that 142 to 40 range is a key level right now from for USD JPY. Um, so from basically decision making level to decision making level, all of this key area from USD JPY. Yeah, and just thinking about the current economic state of the yen, I cannot see the yen going bullish. Like I just can't. Like just thinking about this data and their their resources are apparently becoming scarce in Japan. The energy resources are becoming scarce in Japan. And so I think about that. That doesn't support a bullish yen, right? We went over the import export data, which doesn't support a bullish yen. There is no domestic oil production in Japan. They can produce all but 0.3% of their own oil in Japan, which thinking about their already scarce resources, right? When it comes to that being the predominant thing that they import is energy, oil. Relating to that, they're actually the fourth largest oil importer. So remember we talked about that. The fourth largest oil importer, they have no ability to produce oil on them by themselves. The oil market is currently becoming scarce, and Japan's current resources are becoming scarce. None of those factors support a bullish yen. None of them. Right. So I think about that, you know, I think about the dollar and what our DXY has been showing us, not our dollar index, excuse me, but just our economy. And we've gotten data, not even just from today, But it was actually, do I have it still? Um, oh, it was something about, I think that's right. Um, So like this was from the 17th. So this was yesterday. The drop comes at the drop comes as US retail sales rose by point 0.1 from July. The rise shows the US economy continues to grow. That's all I needed to see. Even as the labor market slows, which may influence the FOMC's interest rate decision tomorrow, with the market expecting a 50 base point cut. Remember what I said the other day? Buy the rumors, sell the news. I heard that term a long time ago. And ever since then, I've just always kind of thought I always had to take these articles with a grain of salt and build my own sentiment around them. And along with the market, like, so it just said the market expects a 50 cut. I'm using and I'm showing you all the context clues I'm putting together that leads me to believe there will only be a 25 base point cut because the economy is already seeming to be recovering. And so a 50 cut would indicate, man, we got to make something happen. I use this analogy too. I told my friend this yesterday. Um, so picture you had $100, right? You had $100 and you were, and okay, so picture I gave you $100, right? So I am the lender and you are the debtor. So you are in debt. I'm gonna lend you $100. But I tell you, hey, look, you can either pay me that, you can either pay me back $50 right now or $25 right now. But either way, you can decide. But either one you pick, you'll be able to pay me again in the future. Right. So thinking about the interest rates, right? So there's this meeting and there's two other meetings. And right now on the table is 25 base point cuts and 50, right? And so going back to our example, you know, if somebody were to give you the option to pay $50 or $25 and nothing changes with the future based on your decision, like nothing changes on you being able to pay in the future or, pay the rest in the future, nothing changes there. I think most of us would probably just pay the $25 if there's no difference, there's no interest, right? Um there's nothing that harms you for waiting to pay that additional 25 bucks, right? So that's kind of how I'm viewing the interest rates. There's no harm right now because we've seen data start to support the US economy recovering. There's no reason for the Fed to leap to the 50 base point cut, right? Because that would then show we need to we need to stimulate this economy and quickly, right? Because that's what the interest rates are for. The interest rates are for short-term effects, right? Which is going to lead me right into getting into our presidential election and how specifically the policies of Trump could potentially affect our economy and our dollar and how the interest rates work with that. And so one thing, a few things that Trump that I noticed with his, you know, kind of the big vision, lower taxes, deregulation, right? So trying to put money back in the people's pockets, deregulation, and lowering corporate tax. Um, Now, deregulation and lowering corporate tax yesterday had a few light bulb moments of how I could see that working like a glove with what these interest rates are supposed to do, right? And so what is deregulation? Deregulation is basically in place to improve business operations. And what does that mean? That is because like there's all the regulations between international trade and um, maybe companies being able to outsource and get products internationally, like stuff like that, that affects how companies expand, hire, improve their business operations, which improves productivity, which improves economy, right? So the deregulation that, you know, Trump is projecting to put in place will increase competition by removing the restrictions, and like the restrictions with trade and businesses dealing with other businesses. Um, just what I understand from that is, a US company getting their products from Japan, right? Or being able to hire a foreign investor, or being able to accept money from a foreign investor to improve their capital so that they can start innovating, right? And have research and do research. And research leads to, you know, answers of current problems, right? And then it leads to the business operations improving. And so that's what deregulation would do. That's one thing that Trump has in place. But the other one that I think is a big one is the lowering of corporate tax. Is the lowering of corporate tax. And corporate tax generally leads to higher wages just because the corporate tax cuts, more money that goes back into the business, the more money that goes back into the business, the more money the business can pay their employees. And so there is something here, right here. The National Bureau of Economic Research, they found corporate income tax cuts lead directly, this is a big one right here, lead directly to increased GDP, gross domestic product, and productivity, which those two concepts lead directly to a positive economy, a bullish dollar, right? And so effects on the dollar, like corporate tax cuts, attract foreign investment because this increases demand for the dollar, right? And we can start to see how something as simple as a corporate tax cut, right? Putting more money in the employees' pockets. What does that do? Allows them to purchase more products. What does that do? Allows whoever purchases the product, right? And whoever is, so of course the economic cycle. So, one person's spend is another person's income. That's what I was getting at there, right? And so if somebody's making more, they're able to spend more. And the person that's spending more is causing the other person to make more, and so on and so forth. And then it's just a cycle, right? And so corporate tax cuts support that, right? The corporate tax cuts support long-term stability of as a reserve currency. And ultimately, I feel like that is really important when we're thinking of economic power. You know, if the dollar, think about if the dollar was not the reserve currency in the world anymore, and people were not reliant on the dollar, kind of how, the dollar is priced in, oil is priced in dollars. Uh, that could have a significant effect on our economy. Um, the corporate tax cuts, those have long-term implications, which when we're thinking about the interest rate, and then we start to think about how these two will end up working together. Okay, we of course won't get a new president until about November, right? Um, and so how I'm thinking about this is these interest rates will get cut to 25 base points, right? We'll get some regrouping from our dollar, right? We'll get some regrouping from our dollar. Now, what doesn't the rate cuts affect? Or what doesn't the rate cuts drown out? I'll say that, I like that better, is the future data, right? Is the future data. So this is just the beginning, right? This is just the beginning. So, as I think about rate cuts, okay, so the 25 base points would help our dollar, in my opinion. So we would see our dollar start to move bullish, which would increase our money supply slightly. And then I think about because after these rate cuts happen, there is what October, November, so there's about a month and a half, 2 months before we get a new president. So before these policies can actually go into place, we have to get there first. Um, but by no means do I think that even though our Federal Reserve System stays away from politics, there has to be some it, it's a business, right? Our economy is a business. So if there's no discussion between central government and central banks and maybe not directly, um, how do I want to phrase this without I just can't see I just can't see the central bank having just no idea what could go on with our president just because they personally have like policies in place that affect the money supply. Like the president has policies in place that affect the money supply, like lowering corporate tax. Like that affects how much money the government receives because corporate tax rates are going back to businesses, but then businesses are putting back into the people. Um, so as I just think about this interest rate decision and how it's going to affect our economy going forward, I just feel like there's a lot of data being thrown around right now, and I think that will only increase after the interest rates because every major data point will have that much more significance for the next cut because the next cut will be 2 days prior to the election, right? Nothing I'm in love with this morning. Interesting. Interesting. So I was watching this video the other day. See if I can pull it up for us. Ah, anyways, this is mine. Okay, yeah. I was watching da, 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 da. Who really owns the Federal Reserve? I was watching this video right here. Who really owns the Federal Reserve? And what I found out was this info here. So I'm gonna go ahead and say a few things. Seven members of the Federal Reserve are Board of Governors. The Board of Governors are appointed by the President and the Senate, right? So seven of the 12 members of the FOMC are appointed by the President and the Senate, right? Appointed by the President and the Senate. Now, that's important to me for what I just said a second ago in um because there has to be some dialogue between central government and central bank, even if it's as simple as knowing who you have in place aligns with, kind of what you guys want to do as an economy. Um, The selection of the Federal Reserve Bank presidents, the 12 federal bank presidents are chosen by their respective banks' board of directors and then sent for approval by the Board of Governors in Washington. But the main reason why I was kind of looking at that was to see what the relationship was between current FOMC members and Trump. Uh, and so it said right here, which was really interesting. Uh, so Jerome Powell, we know Fed Powell. Fed Powell is the one that normally drops the bombs, right? He was appointed by Obama back in 2012. Um, and he was nominated by Trump back in 2018 for Trump's first term. However, they're saying that Trump was really critical of Powell during his term. And if reelected, there is reports that Powell would not be selected for his third term. And there's indications that Trump's team has been drafting proposals that could potentially alter the structure of the Federal Reserve. So that is what I kind of want to jot down here. Um, I got a couple minutes left on the call here. Price consolidating still on gold. So I'll go over just kind of what I want to see on gold and USD JPY here before I wrap it up. Uh, Wanted to look at just signs pointing towards 25 rate cut, signs pointing towards 50, significance for either, impact, why there would be a 25 versus 50, even after I've kind of already built my sentiment around both. There's no better time to be a trader, to be involved within the market, of course, just to be able to capitalize. But even for those of you who have not yet opened a live account, this is a perfect time to open up a demo account because you're able to see the volatility and the movement. Um, if you are completely new to trading, this is a perfect time, in my opinion, for you to introduce yourself to it because you're going to get hit with the the craziness of the market, right? And it'll set your expectations really high. Let's see, crude oil stocks just came out, so let's see what that came out as. Okay, so that rose. I never get the negative though. I never understand why it says negative. Like, why is there a negative there? See how that affected the dollar? Nothing crazy on it yet. Did get an initial spike, but nothing crazy yet. All right, let me go back to this. So number one, gradual approach. This is something that I've heard Fed Powell speak about, and him saying that, if we do too much too quickly, we, the, we could have it could be counterproductive on what we wanted to do for the economy. Um, and so as we've led up to these rate cuts, when was that last meeting he had where he mentioned, let me see something really quick. So July 31st, they kept it the same. So look at that. That's so crazy. Um, kept the rate cuts the same. They said in 4 years, but that's not true. Not being 4 years. That's wow. Thinking about the rate cuts at 0.25, like that's almost at a zero, and that's back in COVID. That makes a lot of sense. Like seeing that right there. That's crazy. It's crazy. The Fed typically prefers a gradual approach. A 25 base point cut would allow them to assess the impact before making larger moves. It's exactly my speculation around it. The US economy has shown resilience with GDP at a 2.8% in the second quarter of quarter 2024. This might not warrant aggressive rate cuts. While inflation has moderated, it's still above the Fed's 2% target. A smaller cut would help avoid reigniting inflationary pressures. I spoke about this, which week was it? Last week, actually, week of the 13th. And what did we get? There was a folder in there that gave me the interest rates year over year. Where is it at? Where is it at? The inflation's rates year over year. Why is that important? I'm about to show you why it's important once I find it. Oh, here it goes. It's coming. I can feel it. Here it goes. It's in here somewhere, isn't it? Okay, maybe it's tomorrow. Da, 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 da. Nope, it's in here somewhere. Unemployment rate. Oh no, that was NFP. It's this. It's down here. It is right here. Inflation rate year over year. Right. Fed's target is 2%. Right. What did this just tell us? This just told us that while inflation has moderated, it's still above 2%. A smaller cut would help avoid reigniting inflationary pressures. This number year over year came out 0.1% than they had projected, the consensus, indicating. So what I'm saying is if this number would have came out at 2.6 or maybe 2.7, maybe we could be leaning on that side of a deeper cut. But because the economy is already showing it's moving towards that 2%, a smaller cut would avoid reigniting those inflationary pressures. The employment rate, while still higher than 4%, is still relatively low, suggesting the economy doesn't need aggressive stimulus, right? And this is why it's so important to do our own research because it's really easy to come and just look at our Fed Watch tool and say, oh, well, the market thinks we're cutting 50 base points. Let me build my analysis off of that. That's not true. In my opinion, that's not true. Factors pointing towards 50 base point cuts, geopolitical tensions and conflicts could lead to more significant global economic slowdown, warning a larger cut, trade uncertainties, ongoing trade tensions, particularly with China, might necessitate. Okay, so this is really important, right? So trade uncertainties, ongoing trade tensions, particularly with China, might necessitate a more substantial monetary policy response. Okay, when will we get more of an update, more of an understanding on how the future of trade between the US and China will unfold? When will we get more? We will get more when we get to our election. Why does that matter? Because that is really, really close to our November 7th date, which I believe the election's on the 9th. When it is election day. Oh, yes, yes, yes. That's pieced together perfectly. Our election day is on the 5th, right? So 2 days after election day, we'll have another decision from the Fed, right? Why is that important? Because the policies that specifically Trump has in place, I haven't got into Kamala yet. Um, in terms of what she wants to do for the economy, but specifically in regards to Trump, he plans or wants to put a 60% tax, a tariff tax on China imports. 60%. In all other imports besides China, 10%, right? So 60% tariff tax on China imports, reducing our China engagement and involvement, um, which where it says number two here, trade uncertainties, right? Trade uncertainties, ongoing trade tensions, particularly with China, right, might necessitate a more substantial monetary policy response. The Fed is unable to make that monetary policy response right now because things have not unfolded completely with China yet, which, in my opinion, will completely unfold after we get our president, which, after we get the new president, we then have the Fed cuts again on the 7th, right? So, do we see how, again, a 50 base point cut does not make sense right now? It just doesn't. It just doesn't. Um, it would probably put us in a really vulnerable position as an economy. Um, so that's actually a really important aspect right there when it comes to trade. There might be political pressure for larger cuts, especially in election year. However, the Fed strives to maintain its independence from political influence, which we've heard time and time again. Financial market expectations, if financial markets are pricing in larger cuts, the Fed might consider a 50 base point cut to avoid disappointing expectations and potentially causing market volatility. Okay. So if the markets are expecting higher cuts, that's interesting because the markets are expecting higher cuts. Approach. If the Fed anticipates a more severe economic slowdown in the near future, they may opt in for larger cut preemptively. All right, I'm gonna use the restroom real quick. I'll be right back. We'll finish it up and then we'll be all good. Be right back. All right. Let's wrap it up and give you my. All right. These charts, dollar moved on that decision making level. Look at this. This is so beautiful. Gold moved on my decision making level, right? And that's where we're currently sitting right now. I want to see gold get in this between. I want to see it get between 25.82 and 25.89 simply for my position for when I take my entry. Um, just so like I can have a small stop if price does sell off, because that's kind of what I am projecting to happen with gold. I know yesterday we talked a little bit about, you know, I had some dispositions that gold would go hit 3K, which the future of gold is unprecedented, right? Is unprecedented. But ahead of these interest rates, um, thinking about where we are right now and just where we have to go as an economy, uh, still with major decisions being made, there's still plenty of time for us to continue bullish, right? And if we think about gold just on a uh, lifetime scale, right? We've seen the bullishness of gold. Now there has been times where, it has corrected itself, but the overall lifespan of gold has been bullish. And for the last, ever since about November of 2022, we've been really bullish, right? We've been really bullish. So maybe it's time for us to start falling off, right? Falling off. So I personally want to see gold sell off. Right? I want to see gold sell off towards about 25.30, um, towards about 25.30. If it if that for any reason we get a 50 base point cut and completely devalues the dollar, that at that point is when I see gold going to hit 3K, right? So 50 base point cut for me supports gold hitting 3K. A 25 base point cut for me supports gold moving towards 25.30 and going bearish. It can still move lower than that, but that's my target for price is 25.30. Um, and so what we're seeing right now is it just consolidate, which I want to see it do exactly this for the next 3 hours, right? Just consolidate, just stay right here for me, right in between this decision making level and this one, right? Just stay right here for me. And then as we get the rate decision, we'll make a move from there. Um, as we take a look at USD JPY, based on two things, and I'm gonna approach it like this: a 25 base point cut. My sentiment is USD JPY moves bullish. All right. A 50 base point cut. My sentiment, USD JPY moves bearish. Right. Because those right there would be two currencies that are losing value. They'd be losing value together. Um, but with USD causing that bearish movement. So 25 base point cuts, we move bullish on USD JPY. And I want to see us, it doesn't have to be today, but you know, at least by the end of this week, if I'm being honest, move towards this 148 and then this 152 range. So I want to see us go attack both of those levels. right? So 148, which is right in this level, and then 152, which is up here, but taking out that inefficiency of price action. That's with a 25 base point cut. With the 50, I can see us moving as low as 128, at least somewhere around the 130s. Like I said again, doesn't have to be today, but definitely we'll get a break, strong sell-off through that weekly decision-making level, right? Through that weekly decision-making level, taking out that area of liquidity and continuing on bearish, right? So those are for the two pairs I'm going to be trading. That's what I'm looking at. Um, and so what I'll do is I'll do this. I'll do this. And I'll go ahead and drop this in the Discord. All right, in my DXY, let's take a look at that real quick. DXY currently sitting on about 100.9. Can definitely see it moving. It just actually looking like it wants to fill that gap in price. So I definitely want to see a move above the 101.2 level. All right. I'm gonna go and drop that in the Discord right there. You guys can see what I'm looking at there. And then you know what? We'll see how this baby unfolds. Um, Super excited in this time of the year as a trader. Mainly because, I've had a lot of experience with trading, over the last year and some change. I've been involved with the financial markets for about 5 now, and this being the first year, I'm really like I'm in here. This being the first year, but with a really profound understanding on this market, um, combining our macros, combining the technicals, combining practical, analysis, logical analysis, just being able to take all these puzzle pieces as we refer to and put them together. Um, it just puts so much confidence in my ability, not just to trade, but and to understand, right? And then apply that understanding. Um, and even though today is the interest rates, like this isn't the last day of trading. Like this is when it really begins for us. So um exciting stuff for today coming in about 3 hours, and we will be on top of it. Um, so other than that, like I said, I'll drop this in the Discord just because you guys can see what I'm looking for when it comes to either a 25 base point cut or a 50 base point cut, price targets for either one. Um, and then, yeah, we'll go from there. We're gonna be back tomorrow, same time. I might even be back later tonight. Um, just because I'm gonna be analyzing all the different, news articles and price movement and this and that, and just the market reaction from the interest rate decision. But it's a fun time to be a trader. Um, Other than that, Jason, appreciate you hopping on. Always secured a nice 30 Piparooskies from gold this morning. Uh,
Right. Yeah, and actually another 5.6 before that too. So
oh
nice.
yeah, gold is always good to us, and that is why we like trading it. Um, so we'll see you tomorrow, Jason. And hopefully, I want us to. I'll give my goal is to have 25 base point cuts. I want to see a 25. I don't want to see a 50. I have a plan for 50, but I don't want to see a 50. Show me the 25 base point cut. It will keep everything in line of what I'm currently viewing. But if not, um, we'll get the 50 and then we'll go from there.
Might have to set the alarm. It's 4 o'clock in the morning for me when that news hits.
Okay. You gotta take
But I
the
really
girls
wanted
to
to see
school or anything?
that. Say again?
You gotta take the girls to school or anything?
No, school holidays. It's first week
Oh,
of school holidays, so they've got
fall
a couple.
break, huh?
Yeah, and one of them's
Okay.
had a sleepover, so I don't haven't had them today or tonight or tomorrow. So happy days.
Nice. Yeah,
Mm.
well, if I'm supposed to be going into work at 10, if I can actually get that switch, that would be ideal because I want to be able to be on for that interest rate release. So if we are, if I am, I'm gonna talk to Q about it too. I know we might even go live for that time, so we'll drop the link in the Discord and see you then.
Okay, okay. I might set my alarm and see if I wake up.
Yeah, hey, if you don't, I know how it is. Once that alarm goes off, sometimes you just need to put it back to rest and then
Yeah,
close those eyes.
That's exactly right.
Yeah. All right, Jason. You have a great night, man. Get some good rest. And if we don't see you in a little bit, we'll definitely see you tomorrow.
Absolutely, mate. And thanks for all the rundown and our analyticals. It was excellent listening to that. Thank
No,
you.
of course, I appreciate you for listening. I feel like I was started rambling a little bit, but it's a lot of information, a lot of information. But we'll figure out how we can utilize it and make the most out of it.
Absolutely.
All right, Jason, you have a good night. Sleep tight, all right?